Want to invest in global companies like Apple, Microsoft, or Nvidia, but not sure where to start? Let's simplify global investing. Option number 1. Investing through global fund of funds through mutual funds. Under this option, one can invest in various global funds in INR and there is no limit to the amount one can invest. However, RBI has a cap of $8 billion in overall global funds and individual funds have their own cap basis the time of ruling by RBI. Thus, one needs to check in which global funds one can invest. The next route is through LRS. All overseas investments work under RBI's liberalized remittance schemes or LRS. Under LRS, a resident Indian can invest up to $250,000 per financial year for overseas investments, travel or education. Whenever you send money abroad, whether through Gift City funds or directly, it counts towards this limit. Banks may collect TCS, tax collected at source, once a certain threshold is crossed. This is not an extra cost, but an advanced tax credit that can be adjusted or refunded when you file your tax returns. Option number 2, Gift City Outbound Fund. You invest in Indian rupees, the fund converts that money into US dollars and invests in global equity portfolios or international funds as per its mandate. This gives you exposure beyond India, US dollar diversification, and professional management of global investments. What is the minimum investment through this route? If the fund has a retail license, it's $5,000. Else, in non-retail category, it's $150,000. Option number 3, direct global investing. Under this option, one can buy direct equity by registering oneself on international tech platforms that allow investors to open demat trading account under a registered broker in US. Here you can invest in global ETFs like S&P 500 or Nasdaq 100. Choose ready-made global themes called as stacks like AI or US tech, or buy individual global stocks or funds directly. This gives you full control, but also means research, monitoring, rebalancing are your responsibility. Tax treatment can vary based on structure and holding period, so it's always best to confirm with your tax advisor. In conclusion, international investing is suitable for investors who already have a strong India equity base and want to allocate around 10-20% globally with a long-term view. Global investing should be about diversification, not chasing trends. First, decide how much global exposure you want. Then choose the right mix, maybe some Gift City funds and some direct global investments based on your comfort and goals. A well-structured India plus global strategy is the key to long-term investing. Thank you, and we'll see you in the next one.